Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you how to make smarter trades. In today's video, we're going to show you how to enter a put credit spread order inside the Thinkorswim platform, aka a bull put spread. So it's commonly referred to as a bull put spread. We call it a put credit spread. But again, we're going to show you how to do it logistically inside the Thinkorswim platform. So this video is not really about pricing them out when you should trade them. It's just all about how do you execute them if you decide that you wanted to get one in the system. So inside of our Thinkorswim platform, obviously what we're going to be doing is dealing with the trade tab right up here and then all products, and you're going to want to type in the ticker symbol of whatever you want to trade. Now at this point, the market's already open at the time that I'm doing this video. SPY, which is one of the major market ETFs, is trading up a little bit higher. So all of this pricing is going to start to reflect, and you can see there's also lots of volume and open interest already coming into the market and to the security. So let's say that we want to trade the April contracts. Those are about 42 days out, and we want to sell a put credit spread in SPY. Well, the first thing that we're going to do is we're going to look for our short strike to initiate the position. So we basically usually use either the probability of being in the money or the deltas, which is down the right-hand side here on the option pricing table or option chain, where the puts are located, to determine what probability of success that we want. So in this case, let's say we want to target about a 30% chance of the stock being in the money, so about a 70% chance of us winning on this trade. In this case, the 232 put options have about a 30% chance of losing, about a 70% chance of winning on this position. Now remember, a put credit spread or a bull put spread is a combination of a selling order and a buying order of an option that's a little bit below or a couple strikes below where your initial sell is. So in this case, we could sell the 232 put options, and then we could buy the 231 put options. So this would be how we would do it. We'd sell the closer in strike price, and we would buy a strike price further out to create a risk-defined position. Now, of course, you can go much further out, right? We just only showed 14 strikes here, but you can buy the 230s, the 229s, etc. You can make this as wide as you want and take in as much credit as you want. Just keep in mind how much risk you're willing to take and make sure that your risk is always under 5% per ticker symbol. So to actually initiate the order, it's actually fairly simple. We're going to start with the short strike of the position, and we're going to right click on it and then go down to sell and then go down to vertical. And so again, vertical is kind of the default language inside of Thinkorswim that basically says it's a combination of a buy and a sell. And so we can use vertical to accomplish a lot of different order types. But when you do that, when you use that short strike as your first strike, when then right clicking and going to vertical sell, it's going to automatically associate that you want to sell the 232 options, which is correct, and buy the next strike lower, which is 231. So you can see that you're selling one and buying the other. Again, it's all in here inside of the order. It tells you which side each contract is on. And in this case, you're taking in a credit of about 17, 18 cents. So you can see the market's actually moving right now as we do this. So if you wanted to do this trade, you would hit confirm and send. You could see your max profit, your max loss, your break-even points, etc. Right? Now, if you wanted to widen out the spread of this trade, you could simply just click the drop down here and you could make this spread a little bit wider. So instead of a $1 wide spread, we could make it a $2 wide spread. So sell the 232s, buy the 230s. We're naturally going to take in a higher credit on this position, but we also have a little bit more risk. So our max profit goes to 33, but our risk goes to 167, and our break-even price drops just a little bit because we're taking in a little bit higher credit, okay? So again, you can kind of play around with this as much as you need. You can go as far out as you want. Again, just keep it in control and manageable based on your risk size and proper option pricing that we teach throughout our course and training. Another really quick way to do it, another hack way to do it, is to use short codes or short keys, or hotkeys that we use inside of Thinkorswim. You can always hold down the control key, and that would allow you to manually click on the different strike prices. So if you hold down the control key on either a Mac or a PC, you can manually click on the bid price for the 232 options. That will sell those. And then you click on the ask price for the 231 options, and that will automatically associate the trade together as a vertical. So that's actually the way that I like to do it. I like to manually click on the strike prices because I don't always use strikes that are right next to each other. So it just allows me to quickly do this without having to use the toggles here on the strike price. Whatever works for you though, That's how you can do it. But again, you just want to hold down the control key right inside of your Thinkorswim platform as you're building that out. So again, thanks so much for watching this video. As always, if you have any additional comments or feedback, please ask them in the comment section right below here. If you love this video, thought it was helpful in any way, please let us know. Consider sharing this video online, help spread the word about Option Alpha. And until next time, happy trading.